This week delivered, man. Fed stuff stockings with coal, that's for sure. Let's move to the next slide. We had a lot of stuff coming into the week, and obviously the biggest thing was the Fed. They cut rates 25 basis points, so we had a total reduction of 100 basis points this year, four cuts. I mean, prior to the coming into the year, remember that a year ago this time, everybody was like, "Oh, we're going to get six, seven cuts." We only ended up getting four, and big. The statement, of course, is what everybody was talking about. Do you think markets overreacted, or you think it was appropriate?
I mean,
I mean,
I don't
I
think
mean,
the
we had.
market.
Let me preface this. We had it was a point 0.6 expected 0.6% expected move, 30 points. Most of the time, we've gotten about a 0.8% move in either direction. We got a full 3% of move.
I mean, the stock market was so ridiculously overbought that it didn't need anything to trigger a sell-off. So, it's like, who cares what the Fed did? The Fed did exactly what they said they were going to do. But the stock market needed an excuse to go down. It had nothing to do with the Fed.
So, still, okay, if that being the case, again, expected move was like 30 points. We ended up getting, 180 damn near points. VIX goes to 27, even after hours. VIX was moving. You think that was appropriate? Or do you, I mean, the moves that we had, I'm gonna, you know what? I'll put it in context on the next slide. 10-year Treasury yield rose 4.5% to 4.5%. We haven't seen that since May. Dollar surges to 24-month highs. Gold and silver get whacked. Copper as well. Cryptos are getting smoked a little bit too, and
everything getting smoked a little bit off of highs that seem to be. Remember, we had a one-way market for about a month and a half.
Yeah, we hadn't had like we were defying gravity. What's the big surprise?
Wow. I guess I guess that's another way of putting it.
Yeah. Okay. I mean, you think that it was deserved a 3% move? You think that deserved VIX going up as much as it did in one day?
Well, the VIX would not have gone up as much as it did if it was trading at kind of a normal level. But since it was so much lower than like historical norms, it exploded. I mean, listen, you know what? This is what happens when you don't have a two-sided market, when everything's one-dimensional. And, eventually that's how the VIX explodes, when the market just going up the market just does one thing and we get so complacent and everybody just sells volatility that, yeah, sure, that's what happens.
I mean, you make it seem like the market has been doing what Tesla's been doing the last several weeks. It hasn't been doing that.
Not to that magnitude because there's too many stocks, but yeah, pretty close. Yeah, I would give you that. I would give you that. I give you that analogy. Yeah, sure.
Pretty damn close.
Tesla's only back to where it was last week, where the market's back to where it was last month.
Yeah, exactly. I guess is what I'm trying to get at. All that being said, this was the second largest move for the VIX ever, and we had a 74% move in the VIX. Two of the largest moves ever have occurred this year. The one thing I will say is that 100% of the time since 1990, the VIX goes over 50% in one day. A month later, it is lower. So you can reasonably expect volatility to retreat after seeing the big move that we saw. But just think about it. Two of the biggest moves ever we've seen in this past year.
That's surprising considering nothing really happened.
Yeah, right? Mm-hmm. Right? Mm-hmm. Other things that show up on here, 2021, two times. Early in the year and later in the year. And that's it as far as years. I mean, the other ones are, of course, the Volmageddon, August 8th, 2011. I think that was, I don't even try to, that was a government thing, I think. I can't remember exactly. God, I'm starting to forget some of these days. But something of interest here. Typically, we see vol fall a lot lower over the next month. So we'll see what we get in this situation here. Yields, why? I just can't reconcile this. It makes you wonder, why are yields surging the way that they are if the Fed is cutting rates? The only thing you could think is people are starting to feel like the Fed made a policy mistake or they're going to at some point. But yields have been really running more recently.
Or the Fed doesn't go grocery shopping and bond traders do.
Yeah, that's a good one.
Maybe.
Yeah, maybe.
Or people are just finally starting to wake up and realize that the Fed doesn't really set interest rates. The market does.
That too.
I've been arguing this for 13 straight years on Tasty, that the market sets interest rates, not the Fed.
Yeah.
It's nice to finally see them listening.
A lot of industries have gotten rocked more recently. I mean, everything, obviously, but healthcare, energy, materials are basically on their butts right now compared to a lot of other things. You can see communication stocks, consumer discretionary, which of course is Tesla. Communication stocks, I think, includes Amazon. They're still up there on the year, but just pay attention here for healthcare. A lot of healthcare stocks have gotten rocked. Matter of fact, that NVO is down big today. Speaking of healthcare stocks, XLE and energy, of course, and materials. I mentioned it because I think it's of interest. We got 6.5 trillion worth of options today. 4.2 of them are AM options for the OPEX. So something of interest, I think. We'll see if we get a move immediately after open, maybe lower. We're already down. We'll see what that brings. But big operations expiration today. Retail sales continues to show consumers are resilient, even though inflation is elevated. Core PCE slowed at the slowest rate since May. BOE and Bank of Japan both did not change rates compared to a lot of other central banks more recently. And then finally, research market measure the likelihood of a reversal from open to close. Check that out.